and who gets hurt, etc. But let's summarize what's happening with oil itself, right? We've fallen under $70 a barrel, 15%, I think, in the last 10 days or so. That's very sharp. Hormuz has looked at what's driving this and what are the big views coming in from the global strategists. Hormuz, over to you.
You know, a lot can happen in a year, right? Around the same time last year, we were worried about oil prices hitting $100 a barrel, and now we are talking about oil prices correcting almost 15% in the last 10 trading sessions, and that is exactly what has transpired with Brent now down almost 30% from the highs of around $97 that it had hit on the September of 28th last year. And since then, it's been in this corrective mode, and in this quarter itself, so far, it's now in almost down 20% in this July to September period so far, which is the worst quarterly drop since the third quarter of 2022. This shows the kind of correction that we've seen in the oil prices. Now, what is causing this? There have been a lot of demand concerns, particularly from US and China, which are the top two consumers, of course, and the top where the demand maximum originates from. And of course, there is this uncertainty over what the OPEC Plus is likely to do as well. Now, considering this fall in oil prices, OPEC Plus had already postponed their already planned output hikes, which were scheduled to begin from October by around 2 months. But then there is this uncertainty because this is not a decisive move that OPEC has taken, and there are plans to increase output by at least 2 million barrels a day by the end of next year, and that is also not giving any form of cushion to the oil prices. Now, what can support them on the downside? Well, there have been reports that came out yesterday that there was a rise in the US stockpiles. There is hurricane season going on in the US. There is one storm that is likely to make landfall today and more in the offing as well. And of course, there is any further output cut announcements that OPEC does end up making in the view of this falling prices. Now, what are strategists saying? JPMorgan believes that they expect Brent to average around $75 a barrel next year, but they expect the prices to dip to the lower 60s by the end of the year. And what Goldman Sachs also believes, for the next quarter, they expect the Brent to average around $77, but their range that they have between 70 to 85, that still remains skewed to the downside. And Citi also believes that Brent is on track to hit their target of low 70s by the end of 2024, and OPEC Plus is now caught in a very vicious circle of trying to sacrifice market share in order to defend price. So all in all, not good going for oil prices right now. There does not seem to be a floor in the offing.
All right, Hormuz, thank you very much for that. So those are some top